The US benchmark stock indices opened the week under positive sentiment. The rally is going on today. The US dollar index halted its two-day growth as investors in the elevated mood are selling safe haven assets, including the US currency. The market cheers the news on the trade front. U.S. Trade Representative Robert Lighthizer and Treasury Secretary Mnuchin had a phone call with Chinese Vice Premier Liu He. Their conversation was constructive. Futures on the S&P 500 have hit historic highs. The index closed yesterday with a 1% rise. Today, the S&P gained 0.4% to trade at 3,441.38. The Dow Jones was 0.7% higher in the early New York trade at 28,418. Nevertheless, the Dow Jones is lagging behind the others in growth, but sustains the bullish outlook. The index of industrial corporations is still 4.2% down than February's record high. Rising risk-on mood stalled the advance of the US dollar, which perked up in the American session yesterday. On the whole, the US dollar index has been trapped sideways at around 93 points for over a month. Today, the dollar bears again pushed the index down towards 92 mark. Amid a lack of serious news, traders are alert to signals from the ECB and the Fed. On Thursday, the US Fed is holding an annual symposium in Jackson Hole that's sure to take center stage this week. Now, analysts doubt the prospects of a further downtrend of the US dollar as the bearish fundamentals are losing their impact. Today, investors take notice of macroeconomic data from the US that will shed light on prospects of the US economic recovery. The focal point today is the Consumer Sentiment Index. Oil prices are trading higher amid temporary disruptions of oil facilities in the Mexican Gulf. The production cuts in the US Gulf Coast were caused by Tropical Storm Laura, which is considered a major hurricane. In the New York session, WTI climbed above the level of $43 per barrel. This dynamic supports commodity currencies. The Canadian dollar again strengthened to the level below 1.32 against its American peer. The currency pair aims to reach again the recent highs at near 1.3140. The storm slashed the oil output by almost 80% or by 1.5 million barrels per day. Besides, oil processing plants in Texas are also scaling back their output rates, which is a positive sign for oil bulls. Some analysts project that production rates could tumble by 1 million barrels per day. That's all for today. Thank you for watching and see you back tomorrow. Bye.